Today on the Blockchain Report, Bitcoin's holding around 102K, and it might be because the US government shutdown is finally over, Congress hits snooze on the next crisis, and the Fed's now guessing inflation data like it's the Price is Right. In the UK, Nigel Farage wants to turn Britain into a Bitcoin fortress because nothing says fiscal discipline like copying America. And Elon Musk just scored $1 trillion pay deal as long as he builds a robot army first. So humanity's best hope may come down to whether Optimus learns stairs before the IRS repossesses Mars. All that on today's show. Let's go. All right, everybody, welcome back to another episode here at the Blockchain Report. It is Thursday, not quite Friday, but the optimism is certainly increasing as we head into the weekend. And we've got a lot to talk about today in our bull run with our top stories. But before we get into it, we are actually going to be joined by one of our favorite guests on the show today, who is making his triumphant return here to the Blockchain Report. He is one of the sharpest macro minds in Europe, a guy who can break down interest rates, liquidity flows, and global risk trends without putting you to sleep. He leads research for one of the most respected digital asset firms on the planet and has a knack for explaining Bitcoin's place in the financial system like he's narrating a documentary about the future. So let's give a big Blockchain Report welcome back to the head of research for Bitwise Europe, Andre Drago, everybody. Andre, it's so good to have you back on the show. How are you, my friend? It's been a minute.
Me back on the show. Yeah, I'm very, very well. I'm just spending time here at Bitcoin Amsterdam right now.
Oh, yeah, tell us about that. That just got underway, right? How are the vibes going right now? We're not sitting quite as pretty as we were, I remember, at the Bitcoin Las Vegas convention a couple of months ago. How are the vibes feeling there? How's it been after that first day?
I mean, the vibes is super excited, right? The focus, just like in Vegas, is Bitcoin Treasury companies. Because one of the key sponsors, right, and I think the owner of Bitcoin Amsterdam is Treasury, which is a Dutch treasury company. And so like the key focus on treasury companies this year, and also institutional adoption in a broader sense. And the vibe's good. I mean, if you look at the crypto fear and greed index, it's at extreme fear levels. I think it's at the same level like we saw in March, right? During like the tariff sell-off, right? It's extremely bearish. But I mean, I'm actually quite surprised that Bitcoin's still holding up above 100K, right? As we speak.
Right.
But like the vibe's still very positive, but it's probably, I mean, it's probably due to this dichotomy between institutional investors that are relatively bullish, right? Despite price action. And retail investors who are probably devastated right now. Right? But the vibe's definitely very bullish.
Well, I'm glad to hear it. It is a weird spot because, the fear and greed index, I think, is around 15 right now, which
15,
is pretty fearful. But like you said, we're still holding above 100K, which in my book seems like some, pretty bearish or bullish news, I should say, considering that the narrative is apparently very bearish right now or fearful. So, I'm glad to hear it sounds like anybody who's in the Bitcoin space right now, I think, knows that things are still bullish long term, but we are dealing with a lot of macro effects here. There's, the United States government just reopened after being closed for 40 odd days. So there's a lot going on right now, but Bitcoin, I think, is really showing its resiliency, and we're really excited to have you on the show to talk about it in regards to a lot of the major events that are going on today. So with that being said, Andre, I want to get into our first story. Once I read it, we're going to bring you back in and chat about it. Sound good?
Yes, of course.
All right, let's do it. First up, after 43 days of finger pointing, furloughs, and unpaid parking tickets, the U.S. government has finally reopened for business. President Donald Trump signed the funding bill last night, ending the longest shutdown in American history, a streak even Washington doesn't want to beat again. The deal squeaked through the Senate 60-40 and the House shortly after. Democrats fought to boost health care funding, while Republicans insisted that they could fix it later. Trump says he's open to working with the other party, and for the Federal Reserve, the shutdown blackout meant missing key October jobs and inflation data. So when they meet in December, the Fed will be flying blind, kind of like a pilot whose instrument panel went out mid-flight and decided, Fives alone will do. Now, that missing data will ripple into interest rate decisions, bond markets, and ultimately Bitcoin's favorite party trick, liquidity. With the government back, agencies like the SEC, CFTC, and IRS are dusting off their desks and logging back into systems they probably forgot their passwords for. Now, that means Bitcoin regulation is back on track, and ETF approvals that were stuck in bureaucratic limbo may finally start moving again. Bringing Andre back. Andre, the American government shutdown is finally over after 43 days, and we finally get some macro data flowing again. From an institutional perspective, how disruptive is it when the Fed has to make interest rate decisions blind without CPI, PPI, or labor data? Seems like a tall task, right?
I mean, despite the shutdown, you still had some data releases by alternative data providers, right? Sorry. So, for instance, during the shutdown, there was a company called Revelio. They still reported jobs numbers, right, for the US. And actually, during the shutdown, they reported, I think, 9,000 jobs had been shed in October, right? So that this kind of deterioration in the US labor market was still going on during the shutdown. You had similar indicators from ADP, which is like a private payroll service provider, data service provider. They also showed that jobs had been contracting, right, over the past couple of weeks. They also report like weekly jobs numbers. And you had these surveys from the University of Michigan. They also, same story, right? Deterioration in like consumer sentiment, deterioration in like job prospects. So they were not like really flying blind, even on the inflation side, right? You've seen these trueflation data, right? They've essentially been drifting higher, right? Implying like deteriorating labor market data, but also at the same time, still accelerating inflation dynamics, which is like a tough spot for the Fed to be in, right? It's kind of stagflationary environment, right? But I think the fact that the government is reopening, you mentioned liquidity, right? I think what was somewhat bearish going into the shutdown was the Treasury general account, right? So the US government, they hold reserves at the Fed in the Treasury general account because they couldn't spend anything because it was shut down, right? This TGA, this Treasury general account at the Fed went up. And the effect is on the banking system, it drains liquidity from the banking system. So it's negative for liquidity. And we saw this, I mean, we saw this in these interbank spread, like the SOFR Fed funds rate spread went up to like 2020 highs, right? Which was implying significant stress in the interbank market, funding stress, right? And that was one of the reasons many analysts attributed like the sell-off to, right, in Bitcoin. So liquidity was drying up because shutdown, TGA going up, liquidity going down, right? And now that the government's reopening, like it all reverses, right? TGA is going down again, meaning there's like a net supply of liquidity into the banking system again, which is bullish, right?
Right. Yeah, no, I think we're definitely all excited for that part, and maybe the end of this year will fulfill the promises that we've been getting throughout the course of the year in terms of Bitcoin's price. But again, like we spoke of earlier, given all this macro chaos, holding above 100 seems pretty bullish to me, as that seems to be kind of the floor right now. But we'll see how the rest of the month and year goes. And another thing that was interesting about this, Andre, was agencies like the SEC, the CFTC, and the IRS are back online after basically being frozen out for the last 6 weeks. So my question to you is, how meaningful is this pause and resume effect for regulatory pipelines, especially things that are like delayed approvals and pending rulemaking? Is that a big deal?
Yes, of course, because we have to wait for the approval, right? We can't do anything without the SEC's green light. So it does affect like the whole pipeline, right? And I think there are around 150 ETF filings still waiting for the SEC's approval, right? Altcoins mostly, or basket products, crypto basket products. So that pipeline hasn't shrunk, right? Has essentially stayed the same or has become even bigger.
And you mentioned ETFs, during the shutdown, we saw ETF flows completely stall, but now that regulators are awake again, do you expect renewed inflows, or has maybe sentiment cooled enough that Bitcoin simply chops until the next macro catalyst occurs?
Yeah, macro catalyst is always important, right? Could be Fed ending QT, right? Or even renewed QE if now that the releases are going on again, like job market data, could be next catalyst, like negative non-farm payroll print or anything, right? So they will pull forward like the timing of QT, ending of QT, and renewed QE possibly, right? That's definitely positive catalyst. But I think, generally what's bullish is the whole macro environment, right? The reopening is bullish in a sense because it always also falls into a timeline, into a seasonal timeline, where not only we know that performance is usually bullish for Bitcoin, right? We know November is usually the best month for Bitcoin, but there's not only seasonality for Bitcoin's performance, there's also like an ETP flow seasonality for Bitcoin. ETP flows tend to accelerate towards the end of the year because of many reasons. Because fund managers, they tend to rebalance their portfolios, right? So things that have underperformed are being bought again, right? Just to rebalance to this kind of neutral weight, right? And so other things that have outperformed are being sold, right? That's like usually the mechanism. But also things like window dressing, right? They want to show that they've been engaged in like the debasement trade, for instance, that they've been buying gold, they've been buying Bitcoin, right, this year, and so on. So there are many factors why ETP flows tend to accelerate. In some years, they tend to double, right, within like the last 50 trading days of the year, historically.
Yeah.
So that could be a meaningful like catalyst that you're just ending. Yeah, you're coming towards year end, right? You're approaching year end, and so you see all these flows accelerating.
Yeah. No, the end of the year definitely presents usually a number of different catalysts. We might be getting another rate cut soon. Hopefully, we'll see what too late Powell's got in store for us this time, as our president lovingly calls him. So it's going to be an interesting 50 days or so. It's about 50 days, I think, till the end of the year, or 40 days or something. So we're right on that path right now, and it'll be interesting in this quote-unquote bull market what's going to transpire toward the end of the year. But that's part of the fun, so we'll see how it goes. All right, moving to the next story, Andre, so hang 10. I'll be back with you in just a second, because after years of unshakable loyalty, even Republicans are starting to sour on how President Trump runs the government. According to a new AP NORC poll of over 1,000 adults, approval of Trump's management of the federal government has dropped sharply among both Republicans and independents. Only 68% of Republicans now say they approve of how he's managing things. That's down from 81% earlier this year. Independents, well, they've dropped even harder, from 38% approval in March to 25% now. The timing isn't exactly great for Trump either. The poll dropped as the record 43-day government shutdown neared its messy conclusion, with both parties blaming each other like parents fighting over who left the stove on. But according to the voters, the GOP is getting a decent share of the blame too, as if the last 6 weeks of chaos were just another episode of The Apprentice, the federal edition. There, we bring it up? Oh, it doesn't work unless we get the timing right. There it is. Now, Trump himself blamed the GOP's poor showing in this month's off-cycle elections on the shutdown, because nothing says personal accountability quite like pointing the finger at your own party. We're bringing Andre back. Andre, this new poll shows that Trump's approval rating among Republicans dropped 13 points, which is significant for his normally very fervent fan base. So how does political confidence shock like this typically show up in broader market behavior? What would you expect to see as a result of this downturn in Trump's approval rating?
I mean, usually it means that more stimulative policies, fiscal policies, right, monetary policies will come, right? It actually increases like the likelihood.
Okay.
Because I think the main reason why approval ratings are dropping are probably related to jobs, right? I mean, the labor market has continued to deteriorate. We've seen many federal workers losing their jobs in the US, right? Seen the spike in initial unemployment claims by federal workers to like record highs because of the shutdown as well. Also because of Doge, which is like a lagging effect of Doge, all of these job cuts.
Right.
But probably some constituents are now reporting we're losing like jobs and like boats because of this shutdown, because of Doge, right? And that's probably one of the least popular kind of policies, right? And so I think at some point he needs to pivot, right? It actually implies that policies will become even more like stimulative. And you've seen that he just announced new stimmy checks, right? Tariff dividend for like low income Americans, right? So I think it actually increases likely, and we probably reverse towards like a more stimulative policy soon, right?
Yeah, no, I think you're absolutely right. Because, we know that Trump bases his success as a president off of the health of the economy, right? And right now, the economy's in a weird spot. It's we got like 7 companies trading $1 trillion between each other, especially because of this AI boom propping everything up. But then with this government shutdown, obviously inflation has been a problem here in the United States more than ever. It's not a huge surprise that Trump's ratings are down. So yeah, he's going to do whatever is necessary to get some more money back in the system and prop up the market again. And stimulus checks just seem to be like another sign of that. And those are really fun too, right? Because it's 2020 all over again, and we remember how fun that was, but it all came crashing down eventually because we all know it's quite artificial. But that's why Bitcoin exists, right? So you can't print money and give everybody $2,000. It seems fun, but it's all lip service as far as I'm concerned. But we'll see. I could be wrong. And Andre, independent voters have been very much affected in this too, as they are down to a 25% approval rating for Trump, which is basically a complete collapse. So my question is, when political center loses trust in government management, does that historically show up first in equities, bonds, consumer behavior, maybe something else? Where are you going to see the initial effects of that, you think?
I don't think like approval ratings of any kind are some kind of power being of like capital market performance or like where like stocks are heading or bonds are heading, Bitcoin's heading. It's just probably a structural kind of trend. I mean, the usual pattern is after every kind of election, and you can look up any kind of election, right? That these approval ratings tend to drift lower over time. Right, it doesn't matter whether you look at Trump or like Biden or any kind of president, right? So I think it's just a natural kind of phenomenon. I don't know why it's been trending down, but at some point, probably voters are just upset with like the general economy, which like Trump can't fix, right? He can't fix like over indebtedness, right? It's like nothing stops the strain, as Lynn Alden says, right? You can't fix these structural problems. He tried austerity. He tried to like cut spending with Doge, but then I think he quickly realized it's not going anywhere, right? So he's probably moving down this kind of stimulus route again, right? And at some point, the voters realize this, but it's a systemic issue, right? We know like the fiat system is essentially like, it's essentially broken, right? That's why we promote Bitcoin, right? Because Bitcoin is a way to like escape this kind of constant erosion of purchasing power that many people are affected by. Essentially, everyone is affected by this, right? And no politician can change it because it's systemic, right? And I think that's probably one of the reasons why you see this kind of downtrend in approval rating independent of like party, right? Political party.
Right. No, that's a super interesting point. I was thinking about it, and I don't think I've ever remembered a case where I've seen on TV like current president's approval ratings are growing or skyrocketing. It's always they're coming down, right?
So it's like no matter who's
in always, right? Because these are, like you said, systemic problems that are going to be hard for anybody in office to fix because they've been going on for decades or, millennia now. So that is an interesting point. You never hear good news on that side of things when it comes to presidents doing better now than they were previously, which is weird and concerning. But with all of this political uncertainty we've been seeing here in the U.S., the government shutdowns, arguing over rate cuts, et cetera, do you think that this uncertainty can actually increase demand for hard assets? Like, do you think that this erosion of confidence in the government actually strengthens the long-term Bitcoin as a political hedge narrative?
Yes, I most certainly do, because I think economic policies uncertainties is maybe bearish in the short term, right? We've seen that during the tariff shock in April, right? Like, you can measure economic policy uncertainty based on like headlines, news headlines about uncertainty in like politics, right? Policies. And that spiked to a new all-time high, right? This kind of economic policy uncertainty in April, and Bitcoin sold off, right? So it was bearish in the short term, but over the medium to long term, it means like more stimulus because corporations don't like uncertainty, right? They can't operate in an environment which is uncertain, so they will apply pressure on politicians, and so at some point you'll see more stimulus, more, and I mean, it's the same game all over again, right? But there are only three certainties in life, right? Death, taxes, and money printing, right? So the money printer doesn't really stop, never stops, right? It just pauses, right? Like we've seen a pause in money printer after COVID because like inflation started to skyrocket, right? Then like the Fed hiked rates, and then you saw a pause in like the money printer, right? Global money supply contracted, but only briefly. US money supply also contracted only briefly, but now it continues to go up, reaching new all-time highs as we speak, both US and global money supply, right? So, yeah.
Yeah, no, absolutely. And we'll see. I feel like we're kind of seeing a repeat of what we already saw, and we know how that game played out. And it's good for Bitcoin. It kind of is not good for a lot of other things, but good for Bitcoin. So we'll leave it at that for now. All right, moving to the next story. Andre, we'll be back with you in just a second to chat because tensions between the U.S. and Venezuela just cranked up a notch. Venezuela has announced a nationwide military exercise this week involving 200,000 troops. Venezuelan Defense Minister Vladimir Padrino said the operation, dubbed Plan Independencia 200, includes land, air, and sea deployments. Now, the drills come as the U.S. confirmed that the nuclear-powered aircraft carrier, the USS Gerald Ford, the largest warship on Earth, has entered the Caribbean. Now, Venezuela is accusing the U.S. military of executing people without due process during a series of anti-drug operations that have targeted 20 vessels since September, leaving at least 76 people dead. Now, Washington says it's part of an anti-narcotics campaign. The Trump administration says the goal is to maintain regional stability. Critics say it looks like a lot like a regime change, but with better branding. Now, Venezuelan President Nicolas Maduro insists that the U.S. is trying to force him out of office, something Trump hasn't exactly denied, saying only that he believes Maduro's days are numbered. Meanwhile, Colombia's President Gustavo Petro just pulled his country's intelligence cooperation with the U.S., citing human rights concerns over the strikes. He said it'll stay that way as long as missile attacks on boats continue. So while the Caribbean heats up, one thing is clear: Maduro's clinging to power while the U.S. Navy is flexing its muscles. All right, Andre, Venezuela just launched a 200,000 troop nationwide military exercise in response to the USS Gerald Ford entering the region. When geopolitical tensions spike like this, what do you think is the first thing institutional investors are looking at right now?
That's a very good question, but I think they look for safe haven assets, right? I think Bitcoin has proven to react positively to these geopolitical risk events, but only after the event. So usually the performance pattern for Bitcoin is it tends to sell off during times of like elevated geopolitical uncertainty, but then it recovers swiftly. So like these geopolitical risk events And we did a quantitative study on like the top major geopolitical risk events since Bitcoin's existence, right? And yeah, the pattern tends to sell off briefly, but then recover sharply. It's I think around 30 to 40% higher after 50 days after these geopolitical risk events. And we ordered them based on like even the severeness of the geopolitical risk event, only taking into account like the top 20. And even those, like, they tend to be like short-lived in terms of the performance effect. So I wouldn't, like, personally as an investor, I wouldn't read too much into this. I'd rather consider these kinds of geopolitical risk events as buying opportunities, right? Because they're just short-term in nature and they create this kind of short-term dips, right?
Right. So, with that being said, would you expect Venezuelans or Latin American citizens to maybe turn more heavily toward Bitcoin if this situation continues to deteriorate? Or are you still expecting like we're going to see that dip until the waters become a little more settled?
For Venezuela, of course, right? Their currency has been depreciating for forever. I mean, right? It feels like they've been depreciating forever. I mean, it's effectively a dollarized country, right? They probably hold stable coins and Bitcoins already, just like high inflation countries like Argentina or Turkey, right? You see high degree of dollarization, stablecoin adoption, Bitcoin adoption. So, but the effect is usually you probably see some capital flight because of uncertainty, right? Which means the currency, the domestic currency, will depreciate even more, which is actually synonymous with inflation is going up again, it's accelerating. So it definitely incentivizes like holding Bitcoin as a kind of hedge against like fiat erosion, right, against inflation. So it's definitely a wise choice to do that. But I'd assume, considering like the history of a high inflation country like Venezuela that has suffered from like high inflation, there's probably a high adoption of like Bitcoin and crypto assets in general, including stablecoins, I'd assume.
Yeah, no, that makes a lot of sense. That's something we've seen through a lot of South American countries right now, and especially during a situation like this, Venezuela, I would expect to be no different. And Andre, on a macro scale, when investors see U.S. military escalation abroad, do you think that pushes more capital into Bitcoin as a non-sovereign hedge, or do they tend to retreat to traditional safe havens first and then think about Bitcoin later?
I think they tend to retreat into traditional safe havens like gold first, right? As a kind of muscle memory, right? But that's generally like the pattern that gold tends to be a better hedge against equity downside risk. Like it tends to perform better than Bitcoin during like days when the S&P 500 is down more than 2%, for instance. But on the other hand, Bitcoin tends to be a better bond hedge, right? It's less correlated to US Treasury bonds than gold, so it's less interest rate sensitive. And even during US Treasury bond down days, Bitcoin outperforms gold, right? It tends to be better bond hedge. Right. So I'd say, I mean, we know like Bitcoin is like converging. It's still risky asset, right? It still has like 30% volatility, realized volatility, but that volatility has been declining structurally, right? It's actually transitioning towards like safe haven asset. I don't think we're there yet. Right. Most likely over longer term becomes like digital gold equivalent, and eventually even disrupts gold. But I think for the time being, worse equity hedge than gold, right? Gold's like the muscle memory safe haven. But US Treasury bonds, I mean, relative to US Treasury bonds, like it's a better hedge than gold. Bitcoin's a better hedge than gold.
Yeah, I think it kind of comes down to the word safe, right? Like the word safe in and of itself comes with a track record. And to a lot of people, Bitcoin 16, 17 years or whatever still doesn't have the long enough track record where I think people are immediately turning to that as a safe haven the way they do for gold. But as we've seen, the adoption is there and it's going to keep going up and to the right. And eventually we're going to laugh about this 20 years from now when everybody's going to Bitcoin first as opposed to gold. But obviously we've got a lot of legwork to do before then. So we're just going to have to wait, and that is okay. All right, I'm excited to talk about this next story, Andre, with you, because this one is happening right in your backyard. So hang 10, we're going to be back there in a sec to chat about it. Because it seems like Brussels has officially had enough of bargain bin Chinese imports. The European Union now wants to fast-track new tariffs on low-value parcels. The cheap online orders flooding Europe from platforms like Shein, Temu, AliExpress, and Amazon's discount abyss. Trade Commissioner Maros Sefcovic sent a letter to EU finance ministers this week proposing the immediate removal of the de minimis exemption, the rule that lets anything under €150 or about $175 slip into Europe duty-free. Now, originally, that exemption wasn't set to vanish until 2028. Now, though, the EU wants it gone by early 2026. You see, last year alone, the number of low-value packages arriving in the EU doubled to 4.6 billion, with over 90% coming from China. Shein, Temu, and AliExpress all declined to comment, and the U.S. has already axed its own duty-free policy for sub-$800 parcels, prompting fears that all cheap stuff would get rerouted to Europe. So now, Brussels is trying to slam the door shut before it becomes the world's clearance bin. Dutch Finance Minister Eelco Heijnen says it's the time to get a grip on Chinese parcels flooding the market, while Greece's finance minister fully supports immediate tariffs on small imports. Even the usually chill Euro Commerce Group, representing European retailers and wholesalers, warned that a patchwork of national fees could wreck the EU's single market. But right now, Brussels seems less concerned about unity and more about reality. Europe's mailrooms are drowning in Shein hauls, its retailers are bleeding cash, and the only thing moving faster than Temu shipping is the European Union's outrage. All right, we're bringing Andre back. Andre, the EU wants to end the de minimis exemption 2 years early, effectively taxing all low-value Chinese parcels. How meaningful is this for European inflation dynamics going forward?
I mean, I'm actually not surprised. Both by like the amount, the doubling of these parcels, right, and the tariff reaction. Because I mean, it's probably a result of the fact that the US levied tariffs on Chinese imports, right, and now you see this kind of diversion of Chinese export, not to the US, right? They are now trying to find other markets for their stuff, for their products, right? And so now they're hitting like European shores, right? And they're actually essentially like literally flooding Europe with these like, low value items essentially. And I think it's just a natural kind of consequence of like this whole tariff war between not only US and China, also Europe and China. We know there's multiple points of discussions between European Union and China. For instance, as far as like automobile imports are concerned from China, right? We've seen like low value Chinese imports, you know, in the like EV space, right, to Europe. And there was also like a tariff reaction by the EU. So I think it's just like in the grand scheme of things, just probably like a natural reaction to this kind of diversion of like exports that usually went to the US, right, now come to Europe, right? But
Yeah, I mean, I've got a bunch of these low-value exports on my desk right now. This clock, this light, this little guy, I got a whole bunch of them from China. And, you know, it does beg the question, though, with 4.6 billion low-value packages, just like the ones I have on my desk, that are currently entering the European Union just last year, 90% of those were from China. So my question, Andre, is how does this shift affect European retail competitiveness going forward? Because 4.6 billion, that's a lot.
I mean, China's still very dominant in many sectors, right? If you consider toys, like I think 95% of all toys are being manufactured in China, right? You can't really tax it out or tariff it out completely. It's just like it's so dominant, and there we know other sectors where it's also very much dominant. So it will definitely increase inflation, right? Because it increases import costs and import goods inflation. But it depends, like on like I don't think like these low value packages are like super dominant in the whole like retail supply chain in Europe, right? Because we're very much self-sufficient in many areas, right? We have so much domestic production in especially northern Italy, Germany, right? Eastern Europe, there's still a lot of domestic manufacturing production. But of course, there are like areas I mentioned toys where like China is still very much dominant.
Yeah, no, I definitely hear you. And do you feel like this influx of Chinese low-value imports that we're seeing, what kind of like effect do you think that could have on European retailers? Like, would we be expecting a slowdown then, or maybe higher consumer prices? Like, and with those effects that these Chinese imports are having on the European economy, could they actually push more people toward Bitcoin as a long-term savings vehicle as their fiat purchasing power continues to slip?
I mean, what tariffs that do, like some people would disagree, but tariffs are definitely inflationary, right? Because they increase import goods inflation, right? And so everything else equal, they increase consumer price inflation, right? Especially from imported goods. But all else equal, I think the moment you see higher tariffs on Chinese imports, of course, like the natural consequence will be like higher inflation in general, right? Because people will substitute, right? If like Chinese imports are becoming more expensive, they go for other products, right? Are probably cheaper, so they bid up prices there. And so because of these substitutions, you'll see like a general increase in like inflation. So and yeah, I think like generally Bitcoin not only likes like realized inflation, especially inflation expectations, right? Because especially market-based inflation expectations, if you see like a repricing market-based inflation expectations in Europe as a consequence of like higher tariffs and so on. And I think we saw that in the US as well, right? There was like a pickup in both survey-based and market-based inflation expectations. Bitcoin tends to be positively correlated to this, so yeah, I think it's definitely bullish from a pure investment point of view.
Yeah, no, I think so too. I mean, a lot of the things we're seeing right now are all ultimately bullish for Bitcoin on the in the long term of things, but they're ultimately bearish for like the economies in the short term. But it's going to, from that pain is I think where we're going to see a lot more Bitcoin adoption on a global scale, because people don't usually do what you say, this is the thing you should do. They do what they need to do to react to their circumstances, right? And that's what we're seeing in South America. They're a lot of Argentina, their currency is not in a great spot. So a lot more people are turning to stable coins and Bitcoin as a hedge against that. And we're seeing that over time. But a lot of times people have to take their own medicine and learn their own lessons to get on board. So yeah, I think we all know the way this tide is going. It's going to take some time, as we know. All right, we got one more story to cover here, Andre, and I'm especially excited to have you for this one. So hang 10, because the UK Parliament member Nigel Farage is going full crypto crusader, calling for Britain to build its own Bitcoin treasury. Now, Farage argues the UK is falling behind as the US, Singapore, and Hong Kong all move towards structured crypto frameworks. The UK currently holds around 61,000 BTC, mostly seized from criminals, not bought strategically. By comparison, the US government holds roughly 198,000 Bitcoin, and China's close behind with 190,000 themselves. So the math is simple. Britain's got crumbs, America and China have bakeries. Now, Farage wants to change that by following Trump's lead and turning Bitcoin into a national reserve asset. He's even polling at 22% to become the next prime minister. So if he wins, we could see the UK suddenly pivot toward Bitcoin. He's promising lighter regulation, easier licensing, and friendlier policies for blockchain businesses. You know, the kind of talk that makes the Bank of England clutch its pearls. Bringing Andre back. Andre, Nigel Farage is calling for the UK to create a formal Bitcoin treasury. From your perspective in Europe, how realistic is this politically, and how radical of a shift would it be for the UK?
I think it wouldn't be that radical because you mentioned they already hold around 60,000 Bitcoins. They didn't sell
True.
it, right? Like the German government, they sold the bottom in summer last year, right? But they had to, I think from Leo's perspective, they had to sell it. But anyway, so I think it's not too far-fetched. You mentioned the polls, right? He's leading the polls. And I think in order to form the next government, he doesn't need to reach like an absolute majority. I think he could even win with this kind of percentage in the polls. But I think like the UK government, despite obviously they've been very slow, right? The FCA have been very slow to admit even retail investors to invest into crypto assets, right? Until October, right? They've just unbanned retail access, UK retail investors to crypto ETPs, right? Like ours. We've been listed on, for instance, London Stock Exchange, right? But it was so far only accessible to institutional investors and professional investors, meaning which hold at least 200,000 pounds, right? And they have financial education and so on. So sophisticated investors. But now they've unbanned this, right? They now have access to crypto ETPs, ETPs in general. So they're moving into the right direction, albeit slowly, right? But I think this kind of move by potential government by Nigel and UKIP, would definitely accelerate this kind of move, right, into the right direction.
Yeah, and we're seeing that happen. It's like we knew this was going to be a long trot up into the right, but it takes those little mini catalysts on the way. The United States coming out and saying we're allegedly creating our own strategic Bitcoin reserve, and it almost gives permission for a lot of other countries to do it too. Just nobody wants to be the first, right? So it kind of begs the question, if the UK did even partially move toward a Bitcoin reserve, Andre, what impact do you think that could have on global Bitcoin liquidity and long-term pricing models moving forward? That would certainly seem to be a big vote of confidence on a global scale, right?
Yes, most definitely. It's because UK is still one of the major financial centers, right? It has probably some kind of signaling effect to other major governments and finance ministers, right? We just saw the news today, right, about the Czech National Bank. They've invested 1 million euros into Bitcoin and other digital assets, but mainly Bitcoin. It looks like it's just a pilot investment, because I think in previous communications they mentioned they want to invest up to 5% of their reserves, right? Which is a couple of billions, I think. So they just tipped their toes, but you can see it's being adopted as a reserve, you've just mentioned the US. I mean, the US, by the way, it holds more than 190 Bitcoins already, because they just seized another bunch. I think they already hold more than 300,000, right, because of seizures and so on. But I think many governments, they've acquired Bitcoin through seizures, right, from illicit activities. The German government, including the UK government, Chinese government, Bulgarian government, all of these government essentially seized Bitcoins from illicit activities. I think the case of Germany was a pirate video platform called Movie 2K, right? But there's so many examples, right? But I think it's definitely a big signaling effect. And but that being said, I don't think that if the UK government bought, for instance, hypothetically speaking, they bought an additional 60,000 Bitcoins, right, to reach more than 100,000. I don't think it would have a huge price performance impact, because many people don't know this, but the Bitcoin market itself is already so big. Bitcoin exchanges, spot exchanges, they have per day, around a couple of 10,000 Bitcoins flowing in and out per day, right? Even if you saw like a big market order, right, probably affects price by, let's say, 5 to 10%. So like the immediate market impact is not that big, but I think the signaling effect, right, like the expectations that is going to be like baked into the price after this kind of announcement, probably even higher, right?
Yeah, no, it definitely seems like moves that we would have seen a couple years ago just don't really move the needle quite the same in one way or the other, which I think really speaks to the new foundation that Bitcoin has built, especially during this last year with all this institutional money. I mean, we saw what the Galaxy Digital dump a couple months ago was like 80,000 coins. The market moved like $3,000 and was back to where it was like 2 days later. So yeah, no, it makes a lot of sense, and I think that just speaks to the maturation we're seeing of Bitcoin and up and to the right going forward. So I think we're all excited about it. We just got to be patient, which can be hard to do. Now, we're going to do something with you really quick here, Andre, that we did last time, but I'm going to give you the opportunity to update your answer to this question because things have changed since we had you last on. So let's go to camera 2 here really quick, gang. And Andre, remember we had you on the show last time, and we've been continuing to do it with all of our favorite guests, is getting their Bitcoin price prediction for the end of the year. You were kind of at a disadvantage last time because you did it months ago. I think we were flying high. Bitcoin was looking unstoppable, but we've obviously seen a lot of macro events come into place that have affected the price. So now we're down to around 102,000. And you remember, we're looking for that price prediction for the end of this year. So December 31st, clock strikes midnight. Does Bitcoin turn into a pumpkin, or is it going to remain the beautiful princess? So I want to give you the opportunity. We had your price prediction at 172,000. We're now about 40 days away from the end of the year. You sticking with that, or do you want to revise it at all? Because remember, there is a Roxom Patagonia jacket at stake here, so the stakes are high. So what are you feeling right now based on the conditions in the market? Where do you think Bitcoin's going to be by the end of this year?
I'm actually sticking to it because I think the fair value of Bitcoin right now is between 150 and 200,000 right now. Because if you look at things like a scarcity, right, you can look at, for instance, the halving supply shock model, or things like global money supply, right? We've seen this divergence from global money supply, and many people said like, oh, it's just a useless banana, right? It's worthless, right? Because it's just based on dollar depreciation and dollar change in dollar exchange rate, which is somewhat true, but there are like so many nuances in global money supply. So, and there's definitely like a long-term relationship between both global money supply and Bitcoin, right? So the farther like, or the more like Bitcoin diverges from global money supply, it's like a ball you hold underwater, right? The more pressure, upside pressure you build, and it's I assume we'll see like a very brutal move over the next weeks. We have like a reversal to this kind of longer term relationship because I don't think we're in a bear market right now, because we talked about sentiment. Sentiment's already so bearish, right? It's like extreme fear.
Yeah.
Like I think downside risks from here are so limited, right? We're still trading above 100K, right? I mean, there's so much talk about long-term holders, Bitcoin OGs, dumping old coins into the market. And it's true, right? They've been offloading hundreds of thousands of Bitcoins in 2025. Right, but it looks like they are becoming exhausted. Short-term holders have already reached the point of max seller exhaustion, in my view. So I think like there's huge asymmetry because downside's fairly limited because sentiment's already so bearish. At the same time, you have this kind of coiled spring, right? The ball underwater, which is Bitcoin right now. And there's so much pressure on the surface. I wouldn't be surprised if we just like rallied 50% in a couple of weeks, you know.
Yeah, no, that makes a lot of sense. You know, like you said, sentiment is so bad. It's like the only thing I've seen with sentiment that bad is like people's opinions on animal abuse. That's also at 15%. Almost everybody can agree that it's not a good thing. Yet here we are, still above 100K. life is pretty good, and I think it's going to get even better. Let's get back to camera one here, guys. So Andre, we really appreciate having you on the show today. It's always so great to be able to pick your mind, and we love that you share your insights and expertise with us. And you also do that on X, and you and the team at Bitwise are doing amazing things. So for everyone in our audience that might not have had the chance already to follow you on X and see what the Bitwise team is doing, what's the best place I can send them where they can get more information?
So I'm on LinkedIn, but also very active on X. So my Twitter handle is, you're just showing it right now. It's at Andre_Dragosh.
Amazing. Well, Andre, thank you so much again for your time today. It's always an absolute treat having you talk shop with us here on the show, and we hope to have you back really soon. And I really hope I get to put that Patagonia on your shoulders this year, my friend, because that means we got some good news in store for Q4. And again, thank you so much for joining us today. It's always a pleasure.
Thank you so much, Hank. A great one.
Pleasure's mine. Cheers, you too. All right, we're taking a quick break here at the Blockchain Report, but when we're back, we're going to be joined by our second special guest of the day, Mr. Lee, and we're going to be talking shop about more of today's biggest headlines, so stay tuned. More Blockchain Report will be coming your way right after this. All right, welcome back to the Blockchain Report. It's time to get back into today's bull run with our top stories of the day, and we'll be joined by our second but equally special guest of the day to talk shop. He is one of the most unapologetically pro-Bitcoin voices on the internet. He's part preacher, part meme lord, and fully committed to separating truth from fiat-powered nonsense. He brings the perfect mix of humor, conviction, and high-signal Bitcoin takes that cut through the noise like a halving event through the weak hands. So let's give a big Blockchain Report welcome back to the show to Mr. Lee, everybody. Mr. Lee, welcome back. It's great to see you. How have you been since we last had you on the show?
Hey, thanks for having me back. I appreciate it. No, I've been doing really well, enjoying fall in the Midwest, so can't complain.
Rock and roll, fall in the Midwest. I'm from Chicago. I know about it well, and we had to have you back. You're one of my mother's personal favorites. She's like, I love that guy with the cowboy hat, Mr. Lee. So we're bringing you back for her and many others that have voiced their approval. So we're super excited to have you back here, Lee. So I'm going to read this story, and then we're going to jam about it, and we'll get to it in just a second. Sound good?
Sounds good.
Let's do it. All right. After 43 days, the U.S. government, as you might remember from earlier, has finally reopened for business. President Trump signed the funding bill last night, ending the longest shutdown in American history. Democrats fought to boost healthcare funding, while Republicans insisted that they could fix it later. Trump said he's open to working with the other party on healthcare, with the government-backed agencies like the SEC, CFTC, and IRS are all back at work. That means Bitcoin regulation could be back on track. All right, we're bringing Mr. Lee back. Mr. Lee, after 43 days, the longest government shutdown in U.S. history is finally over, but the new funding bill only runs through January 30th. Do you think that this is genuine progress, or is this just Congress hitting the snooze button on the next crisis? What do you think?
Well, I think the market's actually answering that question today, right? The market is down quite a bit.
Yeah.
If you look at major indices, Bitcoin started kind of strong today, and then now it's down about 80, 89, 90 basis points for the day. So I think the market's saying, no, this is not legit. I mean, we're going to be right back at it on January 30th and have to have this whole fight all over again. So it doesn't seem to me like anything's been solved. And hey, we're in a fourth turning, so there's no surprises here.
Yeah, ain't that the truth? And, the Fed also missed an entire month of jobs and inflation data, and they'll head into their December meeting basically guessing on rate policy. So my question to you, Lee, is how dangerous is that kind of data blackout for markets, and could that uncertainty actually end up helping Bitcoin in the short term?
Well, because the Federal Reserve has said, right, Chairman Powell and the board has said that they're going to be, quote, data dependent. So they're going to rely upon all of this government data. Now, if you subscribe to something like Trueflation or other more real-time data sources, you have the data all along. But if we're only relying on the government data, then you're right. They're kind of, as he said in the last FOMC press briefing, they're driving in the fog. And so as soon as all this data comes back, I think they'll find that they're way behind once again, right? Because now they're walking back and doing rate cuts. Powell and a number of the other Fed governors are trying to walk back rate cuts for December, which the market pretty much thought was a lock for December for sure.
Yeah.
And even the dot plot suggests that, right? That the Fed governors themselves have suggested that would be the case. But here we are, they're trying to put doubt on it. If I were a betting man, and I'm not betting, not financial advice, but I'm going to imagine that we will still have a rate cut in December. I mean, the employment picture is just deteriorating.
Right. And like Polymarket and those online prediction things, we're having it at like 90, 95%. But now this new wind of more hawkish talk comes out, or tone comes out from Powell. So now we're all kind of waiting in the wind. We'll see how it goes. But I think you're right. I think eventually they are going to cut it. And historically, Lee, Bitcoin tends to rally when Washington looks dysfunctional, like investors are quietly voting no confidence in the system or something. So do you think that this reopening changes that narrative at all, or is Bitcoin still the best hedge against government gridlock around?
I mean, it depends on your time horizon, but I would say, typically Bitcoin does serve as that hedge for government misfunction. If you think back to what was it, 2019 and the repo market crisis, or some of the bank failures in a couple of years ago, right? Bitcoin did quite well, actually. And then here we are, it's just kind of trading along with the rest of the markets. So there's been a lot of things that have changed since 2019 and since 2023. With the ETFs, you've got options trading now on the ETFs, especially IBIT, which has some of the most options open interest. So now we're kind of playing Wall Street games, right? They're able to hedge their exposure, they hedge their upside and their downside, and you've seen volatility really start to come in on Bitcoin, and as well as some of the other assets like MSTR, MicroStrategy, whereas all the other high beta plays are getting crushed. So the game is definitely different, right? But I think over a long time horizon, I mean, what do we think, honestly? Is Bitcoin going to be higher or lower in 4 years? I say higher.
Right. Well, if history rhymes or repeats, it's going to be higher. I don't think anyone who's ever bought Bitcoin and held it for 4 years has ever been underwater. So I think we all expect more of the same. And, now that agencies like the SEC and CFTC and the IRS are back at their desks, ETF approvals and crypto regulations are also supposedly back on track. So Lee, my question is, do you think we should expect any real movement there, or are these just bureaucrats dusting off their keyboards to stall a little bit more?
I mean, we have an administration that is adamantly pro-Bitcoin, adamantly pro-crypto. So I think you're going to continue to see favorable policies, right? And the OCC has come out very supportive of crypto assets and banks being able to hold crypto assets. Chairman Powell said the same thing, with appropriate risk controls, banks can hold Bitcoin and crypto assets. JP Morgan's out there saying you can, use it as collateral. So clearly, there's a lot of forward momentum, dramatic 180-degree shift from the last administration that I do believe will continue. I think that's durable.
Yeah, and we have something that very well could be coming very soon that I want to talk with you about in a second regarding these new stimmy checks that Don Juan has been talking about. So you and I are going to chat about them right after this, because Donald Trump is back on his favorite campaign trail activity, and that's promising people free money. The former president has reintroduced the idea of giving Americans a $2,000 tariff dividend, a stimulus-style payment funded entirely by revenue from tariffs on foreign imports. The concept sounds pretty simple, right? America taxes imports, and those taxes go straight back to the people. Basically, he's pitching a Make America Refund Again program. But as usual, the details are foggier than a White House press briefing. Treasury Secretary Scott Bessent quickly clarified that he hasn't actually discussed the idea with the president and that no formal plan actually exists. If the $2,000 tariff dividend does happen, it would likely follow the model of the pandemic-era stimulus checks. The same ones capped by income, $150K for families, $112K for heads of households, and $75K for individuals. People above those thresholds would get less because apparently inflation is progressive now. But here's where the math stops making sense, and fast. According to the Committee for Responsible Federal Budget, if those payments went out to both adults and children, each round would cost around $600 billion. Trump's tariffs have raised about $100 billion so far and are projected to generate $300 billion per year. Now, Trump's team hasn't released any draft legislation, any math, or any indication of where that extra $300 billion would come from. So unless China suddenly starts buying Teslas in bulk, that $2,000 check is coming up a few zeros short. All right, we're bringing Lee back. Lee, Trump is floating the idea of giving every American $2,000 tariff dividends funded entirely by taxes on foreign imports. On paper, sounds patriotic, but do you see this as real economic policy or more of a campaign trail gimmick?
Well, we have to go back to, the circular Trump meme, right? He wants somebody to do something. He suggests something dramatic and hyperbolic. Everybody freaks out and loses their minds, and then he ends up kind of either walking it back or tacoing, as we like to say, right? Trump always chickens out. So I clearly this is a trial balloon, I would suggest. I mean, I can't imagine that this is real. And it was really interesting to hear Treasury Secretary Besant kind of try to, I don't know if walk back is the right term, but try to address this whole thing in the media over the last couple of days, and suggesting 100,000 for families, even lower than, as you mentioned, the COVID level was for the stimmy checks. And it's like, $100,000 is not exactly wealthy anymore. I mean, yes, that's a good amount of money, but the market is very different from 2020, right? Everything is much more expensive. So it would be very interesting, I guess, to see that the people that are supposed to be helped as part of this whole America First policy be cut out, because many of those folks that may be making 100,000 a year might be blue collar, et cetera, and to be cut out and have those monies instead go to others who maybe aren't as productive or aren't contributing to the economy. So that's going to really create some problems for a space. Not a political commentator, but just kind of looking at it, that seems pretty strange.
Yeah.
So.
Yeah, I mean, the math isn't quite mathing for me, right? So roughly $600 billion in potential payouts versus about $100 billion in tariff revenue so far. So Lee, do you think that this kind of fiscal fantasy highlight why Bitcoin's fixed supply model appeals to people who are sick of accounting magic? Because this seemingly would kind of fit that bill, right?
Well, as one of my favorite analysts, Lynn Alden, likes to say, nothing stops this train. I mean, there's really nothing that we can do to slow down this fiscal dominance that we're in of, the government spending over $1 trillion in deficits and in kind of peacetime. So running, massive fiscal deficits. The Fed's trying to slow things down, but of course they really can't. And then we've been waiting for it. Honestly, many of us, I think, in the Bitcoin community have been waiting. When's the next helicopter money stimmy check idea? And boom, right on cue, right before a Santa Claus rally, the idea comes out. And it just tells you, if you're not in assets, if you're not holding hard, scarce assets, you're going to get crushed. I mean, if you think of the people that are holding Bitcoin, if they're holding gold, even stocks, although I will say, stocks have not held up nearly as well as gold or Bitcoin over the last 5-10 years. So if you're not holding scarce, desirable assets, this economy is going to destroy you. And these stimmy checks are only going to get worse. They're not going to be funded by tariffs. They're going to be funded by the money printer.
Right. Exactly. I mean, we've seen this stimulus check game before, and we saw what it did for crypto back in 2020, right? Like a chunk of those $1,200 payments seemed to go right into Robinhood and then right into Bitcoin, seemingly kicking off that bull run. So it begs the question, Lee, if Trump actually sent out these checks, do you think we'd see a repeat of that Stimmies to Satoshi moment, or has that gone? Are we in a different era now? Like, Robinhood was a big catalyst to that, and it's been around for a while. So would you see more of the same if we got those Stimmy checks issued this year?
That's a good question. I think you might see, it kind of depends on how they ultimately end up giving the money out. If they actually do choose to do it and have some income caps, you might actually not see that big boom in risk assets, because a lot of that money might go into, hey, I got paid on my credit card bill. I did, buy now, pay later on my Chipotle slot bowl. And so I've got to pay that off. Maybe I'm behind on my car payments and I don't want to get repoed. So there's some of those things that I think might happen. If the income limits are different, I think you're going to find those asset holders are going to take that and plow it right into Bitcoin, right into Robinhood, buying a bunch of options, and you'll have dumb money 2.0. So it kind of depends on how they roll it out. But it could, like I said, it could look quite different, because think of the cost of everything today versus 2021. It's a very, very different world. Everything's much more expensive. I mean, insurance, my gosh, car insurance is up 100% since then. So yeah, it might be a different picture.
Yeah, I mean, it does feel like a different world. I mean, between obviously the COVID, the emergence of Robinhood, which cannot be denied, the gamification of stock trading and crypto trading, just was this whole perfect storm of things that really, I think, boosted the Bitcoin price, at least at that time. And we are in a fundamentally different place now. We didn't have institutions the same way, kind of cementing that Bitcoin floor that we're seeing now, hence a lot of less volatility that we have seen compared to previous cycles. So it feels like a wholly different space. But I would expect at least a little bit of that money to make its way in, because as we know, liquidity has always been Bitcoin's best friend. But speaking of a different kind of space entirely. I want to talk about this next story with you, so hang 10. I'll bring you back in a second, because Elon Musk is officially one stock split away from becoming a trillionaire. If, and it's a big if, his army of humanoid robots ever leaves the PowerPoint slide. You see, Tesla shareholders approved a record-breaking $1 trillion compensation plan for Musk after years of legal battles. To unlock it, Musk must achieve goals that sound like a sci-fi fever dream. 1 million robo-taxis roaming the streets, and 1 million Optimus humanoid robots produced per year. If that sounds insane, it's because, well, it is. The plan would require Tesla's market cap to reach $8.5 trillion. That's 6 times its current value, basically turning it into the GDP of several small nations combined. Critics say the deal gives Musk too much power. Musk's defenders say he's proven he can achieve the impossible before. But some experts aren't convinced that humanoid robots are anywhere near ready for prime time, calling this a fantasy. And yet, Tesla shareholders are loving it. One even told Bloomberg she'd rather Elon have the keys to an army of bots than anybody else, which is a sentence that should absolutely be reviewed by Homeland Security. We're bringing Lee back. Mr. Lee, Tesla's shareholders just approved a $1 trillion pay plan for Musk, but to unlock it, he has to produce 1 million robo-taxis and 1 million humanoid Optimus robots per year. Is this the most ambitious corporate goal ever, or just the most expensive science fiction experiment in history? How are you reading this whole thing?
Well, I mean, you can't, don't second guess Elon Musk, right? I mean, he has a saying that he goes from the impossible to late. And he's done that many, many times in the past, and I expect to see the same thing here. I mean, AI is not going away. AI is not a bubble, right? And it's funny, I used to teach emerging technologies and talked about robotics, AI, Bitcoin, all of these technologies that are going to be kind of part of our future. And here we are, just a few years later, they're all actually coming together, right? Because I do believe that the next stage of AI is embodied AI, and he's already proven it in the cars, right? He's got the robo-taxis now starting to get going, and that will take off. That is working. FSD is incredible if you've experienced it. And so the robotics with Optimus is only the next step of the evolution. So once he gets all those going, then people are not going to be working as much, right? Because now the robots are doing all of the work. So again, what are you going to rely on for your living? You, again, better have scarce desirable assets. It's all coming together. So I do think it's realistic. Is it realistic within the timeline that he's laid out? We'll see. Again, he goes from impossible to late, but it does end up happening. Look at Starship. Look at FSD. He's going to make it happen. Don't count him out. I would never short Elon.
Yeah, no, that guy just knows how to make things happen. Love him or hate him, like his track record speaks for itself. And I think one thing that we kind of don't always take into consideration when it comes to these what seemingly are pie in the sky futuristic ideas is that each one of these robots, each one of the cars is continuously collecting more data to make them better all the time. So the acceleration of like the ability of these machines is something that you got to imagine is going to be exponential as they roll out. You get more of these humanoid robots that are understanding tasks that then they can distribute that knowledge to all the other millions of robots. So while today it does seem like the iRobot future that we're talking about seems far away, I think it's a lot closer than we realize once these things start getting up and running. And we talk about the last 5 years seeming so much different from today. I can't even imagine what 2030 is going to feel like. It might be more of a Jetsons type future that I've been waiting for. So I'm excited for it, but also really terrified. But Lee, if Musk were to actually build that many robots, we're talking 1 million a year, right? That is a massive shift in human labor, in human productivity, in energy use. Do you think could that level of automation end up benefiting Bitcoin by making digital money default for machines transacting with each other? Like, have we even really considered the implications in Bitcoin, with robots going forward? Like, what does that future look like to you?
Well, I mean, certainly I think that AI, when there's a need to transfer value, so if I set up a bunch of AI agents to do work for me, and they're going to need to use some kind of value to make purchases on my behalf or, whatever it might be, they're going to have to use some kind of a digital currency. I can't give them a Visa card, right? So I would have said that Bitcoin would be the logical asset that they would use. But watching stable coins become such a such a top priority for this administration, for the Trump administration, and really pushing the things like the Genius Act, and now working on market structure for crypto. Clearly, there's interest there. So it could be that actually stablecoins is the initial benefactor of AI. But where are you going to want to put your wealth once you've actually done your transactions? You're not going to want to leave it in the dollar and let it devalue 7% a year. So ultimately, I do think again there's going to be that a benefit to Bitcoin. But actually, another way to think about this that I thought was interesting. These numbers are massive. Like, how many companies do you imagine would be 1, 2, 3, 4? Nvidia, before the recent turndown, hit $5 trillion in market cap. That's insane. Well, there's so much money being added to our monetary system. $8.5 trillion in 5-10 years?
Right.
Why not? There could be several $10 trillion companies because the dollar keeps debasing. So that is actually the less surprising aspect that I haven't heard a lot of people talk about.
That's a good point. Like $8.5 trillion is such an enormous number, but then if you're factoring the debasement of our currency every day, all the time, it starts to seem a lot more realistic, And I also wonder too, as these AI systems become more and more intelligent. I've seen other ones before that have predicted that like Bitcoin will be the monetary system of the future. I'd be curious, like, when do we get to a point where the robots start having a say in what's actually best? And maybe that's like the tipping point where humanity gets extinct, when they actually start thinking in terms like that. But you got to wonder, like, if an AI is like, hey, we've done all the calculations and Bitcoin is the best asset out there, how is that going to ultimately change things? Do we as the humans then start listening to the algorithm that we created and start adjusting our financial systems and networks based on that info? I don't know, but it'll be interesting. But Musk in and of himself, Lee, has a habit of turning hype into market value like no one else. I mean, whether it's rockets, EVs, or meme coins. Do you think that the market rewards narrative more than fundamentals now? And does that same psychology actually drive Bitcoin cycles too?
Well, narrative, storytelling absolutely is how you hook a lot of investors, right? And if you look at the huge boom in like the data center build outs and semiconductors and memory all throughout this year that's been ramping up, clearly that's been heavily narrative driven, but also it has been driven by real demand. It's not like the .com, pre-.com days where you had Cisco kind of going like crazy with all this dark fiber in the ground that telecom companies were putting in for the future, only to not light any of that up for many, many years. This is very, very different, right? There is actual demand for AI workloads, for inferencing, for all of that today. But it is still very narrative driven. We're talking about a future that's out there several years out where we're able to have AI do all of these things. Every home has a robot doing their work for them, et cetera, et cetera. We're ways out from that. But markets are forward looking, so they have to start to price that in today, right? So definitely narratives are a key driver, I think, of price action. And people like Musk, Jensen Huang of NVIDIA, Satya Nadella of Microsoft, of course, Sam Altman of OpenAI, all of these are just brilliant storytellers in terms of getting people excited about their potential futures. So narratives are definitely play a part. I think right now the narratives aren't really very interesting to investors at the moment. We're going risk off, but again, extend your time preference to a little bit longer than 1 month or 1 week.
Yeah, I think that's a good recommendation for anybody who's anywhere close to the Bitcoin space. Is just zoom out and chill out, because if you're living and dying on every price fluctuation, well, you're going to be a wreck, as you can see. As right now, I don't know if we want to do breaking news now. Apparently, Bitcoin is down to 100K. So it looks like we're still holding that line for now. But I don't know. We saw it break below it, I think, last week a little bit. But so far, we're holding it, despite all of the crazy macro chaos we've been seeing. And that bodes well going forward. All right, we got another story I want to talk with you about, Lee. This is a fun one. So hang 10. We'll be back with you in a second, because I got to say officially, RIP to the penny. After more than 2 centuries of being dropped in couch cushions and ignored at self-checkouts everywhere, the U.S. Mint officially stopped producing the 1-cent coin. President Trump ordered the move earlier this year, calling the penny so wasteful. The final pennies were pressed in Philadelphia and stamped with a special mark before being whisked away for auction. So yeah, the last penny you'll never pick up off the ground is already worth more than your entire jar of them combined. The reason? Well, each penny costs almost 4 cents to make. Turns out printing money isn't as profitable as it sounds sometimes. Ending penny production is expected to save about $56 million a year. There are still an estimated 300 billion pennies floating around, which is the Treasury insists remain legal tender. So yes, you can still pay in pennies if you enjoy being hated by cashiers nationwide. But the real drama isn't over the penny. The nickel now costs nearly 14 cents to make, meaning it's next in line for the guillotine. Dimes, on the other hand, still cost about 6 cents, so they're safe for now. Now, it's a fitting metaphor for modern economics. The smallest things cost the most to make, and the biggest things, like government spending, apparently mint themselves. So pour one out for the penny, America's most useless currency since the $2 bill. Bringing Lee back. Lee, the U.S. Mint just pressed its final penny after 230 years, mainly because each one cost almost 4 cents to make. Do you see this as the symbolic end of physical money, or just the government finally realizing that math does in fact still exist?
Well, I think I knew that this was inevitable when I saw, homeschoolers buying bags of plastic pennies because they were cheaper, right? It's just ridiculous how, it's just ridiculous how we're making this thing for 4 cents and then still putting it out there. But it makes me think about, Roman history. Like if I think about ancient Rome, as a lot of us like to think about ancient Rome often, right? And how they would debase the currency by removing more and more of the silver content of the denarius, putting in more dross and kind of garbage, and then putting that so they could create more coins to create inflation to put it out into the marketplace and hope that the soldiers wouldn't revolt if they wanted to reduce their income. And so, here we are. Of course, it costs more than the production value of the penny and of the nickel to actually put them out into the marketplace. So it screams about the, again, ongoing monetary debasement that I feel like the American people, it's so gradual, they just don't see it happen. They just don't see it happen.
Yeah.
And we've been on this mode since 1913. So it's just one more symbolism, I think, of that debasing currency and the need to be in high quality risk assets, so scarce assets like a Bitcoin, like gold. Mm-hmm. Of course, my favorite Bitcoin is the 21st century gold. But yeah, it's very, very symbolic. Yeah. I mean, it's not surprising.
Yeah, and I'm really happy you brought up the symbolism because, historically, currencies fail when their smallest denominations lose value or become too expensive to mint. So the question is what we're seeing with the penny kind of the canary in the coal mine for the US dollar's long-term credibility, or is it just inflation's version of natural selection?
Yeah, I mean, when is a dollar going to be, not really worth printing, right? When do we just start going to $5, $10, $20 bills? And what does that even get you anymore? I mean, I remember when I was growing up as a young man, you could go to Taco Bell for a couple, $2, $3 that you could fish out of your pocket and have a whole meal. And now you got to bring, my gosh, $10, $15 to go and buy a meal at a fast food restaurant. So you're exactly right. You're going to see more and more of these smaller denomination bills and coins are going to fall out of favor because you really need to bring a $20 bill to buy a bottle of water these days. So why are you going to want to have pennies, dimes, or any coins at all, to be perfectly honest? It's just going to continue to get worse, unfortunately.
Yeah, really the only thing I can think of, even most vending machines are several bucks now. The only thing that I can think of that I know still costs around about $1 are Arizona iced teas. I know the owner of that has gone on record saying, I'm doing fine, I'm keeping the price at 99 cents. So I think he's really the only one truly keeping America great as the owner of Arizona iced teas, and God bless him. And back on topic here though, Lee, when people realize that even the government can't afford to make its own money anymore, does that accelerate the psychological shift toward digital assets like Bitcoin, especially, among younger generations who've never used cash anyway?
I think so. But again, it's so interesting. Bitcoin really appeals to somebody who is very, very curious. They're willing to kind of challenge the narrative. They're willing to ask some hard questions, right? When they see something on the news, they're kind of like, is that really true? Is that real? Is it? It's funny. I'm reading a book right now on President Nixon leading up to the 1971 Nixon shock, where he took us off the gold standard, kind of finally. And his whole speech was around international speculators and all of these different kind of boogeymen that he put out there that was driving the need to get off the gold standard. But we really knew what the answer was. If you were curious and dug in, we were running out of gold. The world governments were looking at us saying, hey, the U.S. is spending way more dollars into the system than they have gold to back it. So I want my gold back, right? And countries started asking for it back. So I think the people that are drawn to it, and yeah, you're right, you are going to see more of the younger generation, more of the millennials and the Gen Z check into it and start to inquire and hopefully start to move kind of more in that direction. But you're even seeing boomers, thanks to Larry Fink, and BlackRock, really pushing Bitcoin as this tool. What does he like to say? He likes to say that it's if you're worried about your currency, worried about your government, worried about debasement, here's this kind of hedge, this digital gold that you can, put into your portfolio. So you are seeing some boomers as well. But it really boils down to being curious, asking questions, and someone who challenges the narrative. They're going to find their ways to Bitcoin and start to put it into their portfolios.
Yeah, and when that comes to younger generations, do you feel like we're seeing, and I feel like we're experiencing it right now, like a very stark shift in, I would even say trust, like in the media at large, right? Like you've seen legacy media institutions have a bit of a hard go of it recently because I don't think people, especially younger generations, trust big corporations because they're often owned by other corporations that are steering their narrative. And we're at a place now where it seems like especially younger generations trust people, the one-to-one, right? That's why you see all of these influencers blow up because it's a lot easier to trust somebody here to here who likely isn't owned by really big money than it is trusting somebody at, CNN or Fox News because there is backing behind that that's very much dictating how they report the news. So it's just like this wholly different ecosystem, both not just in the financial way we've talked about from 2020 to now, but just the way we consume and who we trust in the media is just so fundamentally different. And I think that's definitely having a big impact on how the Bitcoin adoption cycle is going to move forward. But you and I both already knew that. So yes, Lee, we're running a little low on our time. Yeah, we're running a little on our time here, but I want to do something with you we didn't get the chance to do when you were with us last time. So let's go to camera 2 here, guys, or 3. I want to give you the opportunity to play a little game with us, Lee. So what you'll see on the right side here is we have some of our favorite guests and their price predictions for Bitcoin at the end of this year. This is all for fun and games. This is not financial advice, okay? And we're asking what you think Bitcoin's going to be at December 31st, 12 o'clock. Is it still the belle of the ball or is it finally turning into a pumpkin? And you can see on the right side here, we got some of the guesses we have from our past guests and they range pretty considerably. Like you have me and Grant Cardone at the lower end. I'm at 142-ish, he's at 134. But then like in the very optimistic side of things, we got Knut Svanholm at 443,000, God willing. So the stakes, though, are pretty high. The winner of this, we're sending a personalized Roxom Patagonia to, and I'm hoping I get to put it on your shoulders. So, Lee, my question to you is, where do you think we're going to be at the end of this year and why? And then give us your exact Price is Right style guess so we can put you on the leaderboard.
Oh, man. Yeah, if you had asked me this a year ago, I would have said 200 to 250,000. And here we are kind of way underperforming what I would have anticipated. So right now, I would say very good chance of 130,000. I think we do hit one more all-time high yet this year, and then 2026 we just rocket.
Rocket. Okay, so 130, but then this train ain't stopping. We're still going up and to the right in 2026. So I think I know Matt Hogan of Bitwise has been a big proponent of that. What's that? We have a 130 already?
Oh.
Okay.
Oh, we do.
Yeah,
yes,
we have you
right.
tied
Okay.
with Christine Lee. So let's give you your Price is Right moment, and you can change it so you guys have a distinctly different bet. So what do you think it is, given Christine's at 130 already?
I'm going bullish. 131,000.
I like the cut of your jib, Lee. I like it. All right, let's put him on the leaderboard. Perfect. And let's get back to camera 1 here, guys. Awesome, Lee. Well, I got to say, Mr. Lee, it's always an absolute pleasure having you on the show. You have such a wealth of knowledge and perspective on things that I know me and our audience are always interested in hearing. And before we let you go today, you're doing cool stuff in the Bitcoin space. If our audience wanted to learn more about what you're up to or get some of your hot takes, what's an X account, a website, where can they get more info on what you've been up to?
Yeah, follow me on X at Lee Winbush. I think you've got it up on the screen there. I love to engage in conversations around Bitcoin, around some of the Bitcoin miners. I'm part of the mining mafia group, the Bitcoin Treasury companies, which has been a little less fun since June, but still a fascinating space that I think over the long haul is going to do very, very well. So find me on X and let's mix it up.
Rock and roll. Well, thank you so much again, Lee. It's always a great time having you on the show. We're excited to have you back soon. And next time I see you, hopefully I got a nice Patagonia to give you. So we'll be keeping an eye out on those price predictions. And I hope you enjoy the rest of your week, my friend. Thanks again for tuning in with us today.
Great to see you again, Hank. Take care.
Pleasure's all mine. Cheers. All right, we're taking a quick break here at the Blockchain Report, but when we're back, we got some chart analysis so we can figure out what is actually going on with Bitcoin right now as we head into the final month of the year. We're just about 10 days away, and we've still got some price predictions that are going to need a little bit of help to come true. So stay tuned. We got more Blockchain Report coming your way right after this.
Your savings, your salary, your time. Worth less every second. Some call me Chicken Little. Others, Bubble Boy. I'm a bit changed.
Yeah, man.
It sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index is collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Fuck. Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card. Buy lunch, gas, or your weekly groceries. And you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee. And right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. All right, we're checking in on Bitcoin's price and our market up down, and it's over, gang. Pack your bags. Bitcoin is dead. It's under 100,000 right now. Just kidding, we're going to be fine. But we have seen a bit of a downturn, about 1.5% in the last 24 hours, but nothing to fear. We're just experiencing, I think, the effects of some of this macro chaos that's been going on in this wild world. The whole market's been dumping today because the government shutdown looks less of it like of a shutdown and just more of a parlay until we get to do this again at the end of January. So what I want to do here is go to our Bitcoin Alpha segment where we're breaking down what's really going on under the hood of Bitcoin's price action, okay? The market does seem to be a little terrified right now. The charts are certainly looking tense, but the data is telling us a completely different story, one that's historically led to some major reversals. So let's go through the big 3 charts, and I'll show you exactly where I'm drawing as we talk through them. So let's get to it and bring up our first chart here, gang. All right, so the first one on our board here today you see is the Bitcoin Fear and Greed Index here up at the top left. I don't know why my telestrator thing, there they are, it's working. Okay, so the Fear and Greed Index, this one measures Bitcoin's emotional temperature, all right? It's combining volatility, trading volume, social sentiment, dominance, and Google searches into a score from 0 to 100. All right, that means 0 means we're in complete panic. 100 means it's euphoric greed and everybody's a genius. It's my favorite one. Right now, we're sitting at 15 down here on the left. All right, that is extreme fear. That's a level we usually see during full-blown bear markets, not after Bitcoin's held 100K for 188 straight days. So there appears to be a major disconnect between how people feel and what is actually happening in the market. That mismatch, okay, fear is at all-time high levels, tends to be a setup for reversal. Okay, so what you'll see here next is basically people are scared for no good reason. There is no reason for us to be at 15 right now, okay? Because historically, that is when the smart money starts quietly buying, which oftentimes is the first signal to a nice rebound, which we could be seeing here and is indicated by my little yellow arrow, okay? Let's bring up chart number 2 here, guys. This next one we're looking at is the Bitcoin cycle master chart, okay? This chart tracks where Bitcoin sits in its broader market cycle using on-chain data like coin value days destroyed, and terminal price. So each color band represents a different valuation zone. All right, so the green and blue, so here's green, here's blue, those are undervalued, okay? Purple is fair market value. We seem to be there right about now. All right, orange is aggressively valued, and red is where things are getting a little overheated, okay? Right now, Bitcoin's trading just above the purple fair market value line at about 100, 101K. I think we're down to 100K right now. So every local top this cycle has been just below that orange aggressively valued band, and every local bottom has bounced from around the purple band here. So you can see we've just been playing pinball between these two zones, all right? So right now, we are in that accumulation sweet spot again, okay? Right where this circle is here, all right? That's our support, and we're feeling the support line right about at 100K, okay? Then you can see the aggressively valued line, all right, is way up here around 170K. Okay, so the space in between them, this is the range we've been holding, right? But more recently, we've been banding in between these two lines right here. The longer Bitcoin holds above this purple value line that we've seen, okay, the stronger the case for another leg higher. And if it breaks into this orange band right here, okay, we're looking at a potential run to 170K. That's where the next level of resistance is. So that is what we're really keeping an eye on right now, even with Bitcoin's price hovering just above that 100K mark. So let's go to our last chart here, boys and girls. All right. There's no chart. We don't have a chart for this one. Nope, no chart. Okay, well, we don't have that one. So let's just get to kind of the summary of how things are actually looking today, right? So pretty much what we're seeing is the selling pressure this cycle has been, for lack of a better term, intense, okay? But the more important story has been the relentless buying that it's been met with, okay? What's really happening is a reshuffling of coins from early holders sitting on big profits to the new entrants building positions at higher prices. Oftentimes, those are the institutions we're seeing at play. Now, that process raises the overall network cost basis, meaning that every bear market floor gets a little bit higher. So while the headlines are screaming fear and doom, the data says accumulation, okay? It's the same pattern Bitcoin's run for the last 15 years. You rinse, you repeat, and then you rally. So cycles change, emotions swing, but Bitcoin's math stays undefeated. And that's why the long-term story is still very bullish despite this sub six-figure price that we're seeing at this very moment in time right now. So relax, zoom out, everything's gonna be fine. All right, we're taking a quick break, but when we're back, more blockchain report coming your way. Stay tuned. We'll be back after this. Wish you could grab cash without selling your Bitcoin? Yeah, me too. But hey, that's why Ledn exists. They're the global leader in Bitcoin-backed loans. We're talking over $9 billion issued since 2018 with a perfect record protecting client assets. Now you might be asking, Hank, what makes a Ledn loan different? Well, with custody loans, your collateral stays put. They don't go degen and lend it out for yield. There are no credit checks. It funds in under 6 hours, no monthly payments. You can repay anytime with zero penalties. And for transparency that grown-ups actually want, proof of reserves reports every 6 months verified by a top accounting firm. You see, the bottom line here, gang, is Ledn lets Bitcoin holders unlock liquidity without selling. And you can check them out over at ledn.io/RoxomTV. That's ledn.io/RoxomTV. All right, gang, we got one more story in today's bull run, so let's get into it. JP Morgan says that artificial intelligence isn't just the future, it's also a black hole for money. A new report says the AI industry will need to generate $650 billion in annual revenue just to deliver a measly 10% return on the trillions being shoveled into it through 2030. Now, to make that math work, they say it's basically like charging every iPhone user on Earth $34.72 a month, or every Netflix subscriber $180 a month forever. Now, JP Morgan analysts are warning about overcapacity, where we end up with billions of dollars worth of idle data centers sitting around waiting for prompts that never come. Basically, the blockbuster video of compute power, if you will. Sam Altman from OpenAI even admitted this scenario could happen, which is the business equivalent of saying, we might be building the Titanic, but we'll figure out the iceberg part later. Well, the report didn't call it an AI bubble outright, but the vibes were certainly there. Former Intel CEO Pat Gelsinger says the businesses aren't even benefiting from AI yet, while it's already wrecking traditional service industries. Now, if the bubble pops, it could wipe out $20 trillion in market cap, which would make crypto winter look like spring break. So basically, AI investing is the Hunger Games, and Wall Street's already selling the popcorn. All right, it's time to wrap up today's show with a little bullish, bearish, or BS. So let's see how things are looking for Bitcoin, boys and girls, and roll the stinger. Let's do it. All right, it's time to wrap things up for today with a little bullish, bearish, or BS. This is the part of the show where we recap our top stories of the day and determine whether things are looking good, bad, or otherwise for Bitcoin. Let's do it. First up, after 43 days of chaos, furloughs, and unpaid bills, the U.S. government is back in business, baby. The deal funds operations through January 30th, basically Congress hitting the snooze on the next crisis, and puts the Fed back in the driver's seat as new inflation data rolls in. That means macro clarity is returning, and so are the regulators who have been on coffee break since September. Ooh, my diagnosis on this one, I'm going to call bullish, all right? Because the markets hate uncertainty, and this shutdown was peak uncertainty. Now, with the government back online, the Fed regains visibility into inflation data, ETF approvals can resume, and liquidity flows start normalizing again. That's the kind of macro stability Bitcoin feeds on, especially if lower inflation readings soften real interest rates heading into December. So in short, the government's opening again, liquidity is returning, and that is bullish for BTC. Great start. Next up, UK politician Nigel Farage says it's time for Britain to build a national Bitcoin reserve, calling Bitcoin scarce, secure, and impossible to inflate. He's taking a page out of Trump's playbook, arguing that the UK needs to catch up as global powers like the US and China stack sats. Now, Farage is even polling at 22% to become the next PM, making this more than just campaign noise. Ooh, I'm feeling bullish on the Brits, okay? Because if Farage gains traction, Bitcoin adoption at the national level could spread across Western governments. Even talk of sovereign Bitcoin reserves legitimizes the asset class and drives long-term institutional interest. It's symbolic for now, but symbols move markets, especially when they start showing up in Parliament. So in short, political Bitcoin talk in the UK equals a bullish signal for global adoption, and we're all here for it. So great start today, 2 bullish, 0 bearish, 1 BS or no BS. Let's see if we can go for the clean sweep today. Last one coming up. As Tesla shareholders approved a record-breaking $1 trillion pay package for Elon Musk, as long as he delivers, 1 million robo-taxis and humanoid robots per year. Critics are calling it delusional, but fans say Musk's impossible goals tend to become inevitable over time. Now, if he pulls it off, Tesla's valuation would skyrocket to $8.5 trillion, roughly the GDP of every country that's ever doubted him. Whew, my diagnosis on this, it's a tough one, but I'm going to call BS, okay? Because while it's fun to watch, this story has almost 0 direct impact on Bitcoin fundamentals, unless, of course, those robots all become Bitcoin maxis. Now, the only connection is if Musk decides to start paying his robot RB in Dogecoin or something, then the hype machine might pump tech stocks short term. But it's not moving the Bitcoin needle in any meaningful way as of yet. So Elon's robots aren't saving Bitcoin, but they might be saving his ego. So today's final tally, 2 bullish, 0 bearish, and 1 BS, which means today's overall diagnosis is bullish, baby. We got 2 strong macro and geopolitical tailwinds are aligning. The U.S. economy is reopening its liquidity floodgates, and political leaders abroad are pushing Bitcoin onto the global stage. The Musk robot saga is certainly entertaining noise, but the signal, my friends, is clear. Bitcoin setup remains strong heading into the end of this year. Whew, that was a lot of talky for me today, gang. But I want to say with my last few breaths, thank you as always for tuning in with us here at the Blockchain Report. And if you haven't already, do the thing. Make sure to like, follow, and subscribe to RoxomTV, the Blockchain Report, and me, and Hank at RoxomTV, wherever you choose to do your doom scrolling. And we will be back tomorrow for our Friday episode where we wrap up the week and hopefully continue with some bullish momentum for our beloved BTC. But until then, thanks again for watching. Make sure to stay safe, stay informed, and always make sure to hodl on. I'll see you tomorrow.